Asset managers have recently been getting involved in crypto, causing BTC's price to go parabolic and many investors to become rich in the process.
Everyone wants to be rich.
However, there are a few that don't seem to want to join the party. One of these is Vanguard, the second largest asset manager behind its arch rival BlackRock. But with a brand new CEO at Vanguard's helm, coming from none other than BlackRock itself, could this all be about to change? Today, we aim to find out. Before we begin, I need to let you know that I am not a financial advisor and nothing in this video should be considered financial or investment advice. This is purely educational content sprinkled with a healthy dose of entertainment. So sit back, relax, and enjoy. Now, Vanguard was founded in 1975 by a chap named John C. Bogle, who was more commonly referred to as Jack. Vanguard's roots stem back to 1951, however, when Jack was hired by the Wellington Management Company immediately after graduating from Princeton University, where he studied economics. During his time at Princeton, Jack wrote a 130-page paper about the mutual fund industry. Well, it was the 1950s, people had to pass the time somehow. Anyway, that paper then reached several key individuals, most notably Walter Morgan, founder of the Wellington Fund. Walter read Jack's paper from front to back and wasted no time in getting Jack on board as soon as he'd finished at Princeton. Fast forward to 1966, and Jack formed a merger with a go-go fund manager from Boston during the era of aggressive stock growth. A go-go fund is the term used for a mutual fund which focuses on high-risk investments, by the way. Anyways, by 1967, Jack had become the president of the Wellington Company and by 1970 had risen to become its new CEO. Good for him. However, that title was ripped away in 1974 due to the merger ending badly as the go-go era came crashing down. According to Jack's book, titled Stay the Course, quote, "The earnings of Wellington Management Company plummeted and its stock price followed suit, dropping from a high of $50 per share in 1968 to a low of $4.25 in 1975. Painful. Mind you, some cryptos could achieve that in an afternoon." Now, not surprisingly, Jack was subsequently fired by the board of directors for overseeing this collapse in the share price. But there was a silver lining to this cloud because he managed to convince the board to let him stay with the company to create a new fund division. He called this division Vanguard, named after HMS Vanguard, a ship he'd read about that was used by the British Royal Navy in the late 1700s. The board actually resisted the name at first until Jack pointed out that Vanguard funds would be listed next to Wellington funds in alphabetical order. Hey, it's the little things, right? And by the way, if you're enjoying the video so far, give it a boost by thumping that like button. And while you're there, subscribe to the channel if you haven't already and ping that notification bell to catch our next one.
Bro Crypto Podcast.
Okay, welcome to the Bro Crypto Podcast. I'm Chadimus Maximus, go by MaxChad100 on Twitter.
And I am Gigadick, the dude with the biggest P&L in all of crypto.
Bro, say what? My P&L is 100% bigger than yours.
Bro, please. I was longing Doge and drinking neat Belvedere while you were still spot buying BTC on Mount Gox, bro.
Bro, you're still driving a 2020 Aventador. Where's your Bugatti at?
Bro, when bonk hits $1, I'm going to be rocking a super yacht while you're still stuck in traffic, bro.
The Bro Crypto Podcast is sponsored by the Coin Bureau Deals page. If you're looking for trading fee discounts of up to 60%, exchange sign-up bonuses of up to $60,000, and amazing discounts on hardware wallets, then don't be a bro, be in the know, and check out the link in the description below. And now, back to the show.
Bro Crypto Podcast.
Bro.
Bro.
Bruh.
Bro.
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 Oh, okay, they're still going. Right. Look, you can either listen to these idiots for the next 4 hours, or you can head to the Coin Bureau Deals page and find something useful. Your call. Anyway, while Wellington's board of directors were happy for Jack to stick around, they'd also prohibited him from actively offering advice or managing funds, basically to avoid him having any more crazy ideas. Well, that didn't work because these limitations on his active involvement instead inspired him to create a passive investment fund. This idea led to the launch of the first index investment trust in 1976, which is now called the Vanguard 500 Index. As you've probably guessed, this is an index of the S&P 500. In case you're not sure what indexing is, it can be simply thought of as a list. So, to use the Vanguard 500 Index as an example, it's a list of each stock included in the 500 companies that make up the S&P 500, with investments made into each of these companies. Now, Jack's S&P 500 index was a bit of a flop at first, raising just $11 million in its initial price offering, or IPO, compared to expectations of $150 million. The banks managing the IPO advised Jack to shut it down, and then chairman of rival firm Fidelity said that, due to Vanguard's ultra-low fees and lack of uptake, their business model would never work. Nevertheless, Jack refused to back down. And by the 1990s, it was clear that Jack had proven Fidelity and the banks wrong, in no small part thanks to the rise in tech companies during the dot-com bubble. These tech companies would pay their employees a pretty penny or two, and handling their retirement packages meant that Vanguard earned a pretty penny as well. The popularity of these products saw Vanguard expand its offerings as time went on, including indexing for small caps, a total stock market fund, and indexing for the international stock market. Several of these, notably Vanguard's original S&P 500 index, became among the largest funds out there, propelling Vanguard to become the biggest mutual fund company in the world. In fact, 2005 saw Vanguard hit the milestone of having $1 trillion in assets under management, or AUM. Today, Vanguard remains one of the leading investment firms, serving more than 50 million customers. With a mind-melting $8.6 trillion in AUM, it's second only to BlackRock, which boasts an AUM of $10.5 trillion. Hey, what's a couple of $1 trillion either way, eh? Now, this ties into what has made Vanguard so successful. The biggest reason for Vanguard's success has arguably been its company ethics. For reference, Vanguard doesn't make profit outside of the minuscule fees it charges because it's not a publicly traded company. Jack Bogle strongly believed it was a conflict of interest to offer stock in a company that's meant to generate the best returns for its investors. In fact, Vanguard prides itself on not having any ownership whatsoever, saying that the company is owned by its member funds, which in turn are owned by fund shareholders. Rival BlackRock, on the other hand, is publicly traded, meaning that its priority is to bring as much money in as possible in order to keep the shareholders happy. As a fun fact, if Jack had chosen to list Vanguard as a publicly traded company, it's estimated that he could have had a net worth in the billions of dollars. However, he died in 2019 with a net worth of just $80 million. Now, don't get me wrong, that is still a crazy amount of money, but it's pretty modest for someone who's responsible for creating trillions of dollars of value for its investors. It's even more modest when you consider that Jack gave half of this away to charity. Truly one of the good guys. Anyway, Vanguard's philosophy is why many people believe it to be the best investment firm there is. That's because Vanguard has a proven track record of ensuring investor returns. The way it does this is by following 4 key principles for success, which have guided the company since its inception. The first of these principles is goals. Basically, you create explicit targets for your savings and investments that are realistically achievable. The second is balance, which essentially pertains to creating a well-diversified portfolio. The third principle is cost, namely minimizing costs around taxes and investment expenses, such as transaction fees. And the final principle is discipline. As you'll no doubt have guessed, this one is about sticking to the plan for the long haul. Of course, the long haul is all well and good, so long as you're still around to realize your gains. As a not-so-fun fact, rival investment firm Fidelity once found that the investors with the most profitable portfolios were ones who hadn't touched them for years. Well, As it turned out, that's because most of these investors were already dead. Make of that what you will. Anyways, these 4 pillars are important because Jack built Vanguard on the belief that the average money manager will rarely beat the market over the long haul. Jack instead advocated for simple, cost-efficient investments that offer consistent, if average, returns. It's a simple idea that's actually spawned some die-hard Jack Bogle fans who affectionately call themselves Bogleheads. Anywho, in order to ensure that the vast majority of customers are in profit, Vanguard will vet each investment opportunity in full before offering it out. Typically, it only green-lights assets that can generate their own cash flow and aren't very volatile. As such, there are some more traditional assets that Vanguard doesn't offer, such as gold and real estate. These are considered by Vanguard to be alternative assets, and according to its website, quote, Vanguard classifies these types of funds as aggressive funds, which means they can be subject to extensive fluctuations in share prices. Instead, Vanguard's focus is on assets like stocks, bonds, and other securities to provide investors with a stable method of income generation. This long-term, risk-averse approach is exactly why it's a favourite of many investors who are more than happy with earning an average of around 11% on their investments per year. Not crypto people, in other words. And this all naturally ties into how Vanguard feels about investing in even more volatile assets like cryptocurrencies, namely Bitcoin. On the surface, its stance on Bitcoin is fairly obvious. But there is more to it than meets the eye. Allow me to explain. As alluded to in the introduction, Vanguard is one of the few asset managers that hasn't rushed to offer a spot Bitcoin ETF, nor does it plan to anytime soon. That's because, according to Vanguard's website, quote, cryptocurrencies are highly speculative in their current state, and Vanguard believes their long-term investment case is weak. Oof. In fact, there are numerous pages across Vanguard's website that outline why it believes a Bitcoin ETF is bad for your portfolio, including a clip of a discussion between Greg Davis, Vanguard's chief investment officer, and Tim Buckley, its current CEO, who is expected to retire by the end of the year, but we'll come back to that later. Now, in that clip, Tim says, quote, we don't plan to, and we're not going to change our minds on this unless the asset class changes. We don't believe a Bitcoin ETF belongs in a long-term portfolio of someone saving for retirement. Something like Bitcoin is just too volatile to be a store of value. Wow, Tim, straight for the jugular. So then, you'd be forgiven for thinking that Vanguard has absolutely no interest in crypto whatsoever. However, that's not entirely true. As a matter of fact, Vanguard happens to be the second largest shareholder of MicroStrategy stock, with a 9.85% ownership. If you watched our video on MicroStrategy, you'll know that it's basically become a Bitcoin proxy since Michael Saylor became the patron saint of all things Satoshi. You can learn more about MicroStrategy using the link in the description, by the way. And, as a side note, MicroStrategy's MSTR stock is also included in the S&P 500, meaning that Bitcoin is infiltrating the majority of portfolios out there. And the Vanguard 500 index is one of the top 3 ETFs by assets under management. So, in a weird roundabout kind of way, there's a good chance that some other investors in your family have some sort of exposure to Bitcoin. So, feel free to use that one at your next get-together. Anywho, Vanguard also has shares in Bitcoin mining companies such as Riot Blockchain and Marathon Digital. This is important because of how much vetting Vanguard does of an asset before it decides to invest. The fact that it has gone ahead and aped in shows that it understands the tech. To be fair, this interest is something that's actually been confirmed by Vanguard. Heck, even Tim Buckley himself has said that while they're not interested in BTC as an asset, they do find the underlying tech intriguing. But of course, the headline event causing so much speculation is the announcement that Tim will be stepping down as CEO to be replaced by Salim Ramji. Now, this is significant for 2 reasons. First, Vanguard's selection of Salim marks the first time in its history that a CEO has been selected from outside the company, marking the end of the Bogle era. For reference, all three prior successors to Jack Bogle had all worked for him before climbing their way to the top of the ladder. Those CEOs, for anyone interested, were John Brennan, William McNabb, and of course, Tim Buckley. Anyway, the second reason why this is significant is that Salim has come straight from the enemy, so to speak. Salim is a veteran of BlackRock with 25 years' experience in the asset management industry, and it was even believed that he could be named as the successor to current BlackRock CEO Larry Fink. And if you're thinking, yeah, big deal, another high-profile dude in a suit getting another high-profile job, well, consider that Salim is the former head of BlackRock's global ETF business, the very same team that pushed so hard for a spot Bitcoin ETF in the first place. As a result of that push, BlackRock's IBIT has garnered a staggering $18 billion in assets under management. In fact, Salim has openly expressed his enthusiasm for Bitcoin during his time with BlackRock, saying, quote, "The underlying technology that underpins Bitcoin and blockchain is something we're incredibly excited about," before going on to say that the lack of an intermediary is what sparks their excitement. Anywho, this change of CEOs could be the first of many big changes to come to Vanguard in the not-too-distant future. According to an article by Bloomberg, Vanguard's board of directors, who usually just nod in agreement with whatever Bogleite CEO is in the room, have recently begun asserting themselves, pushing for Vanguard to look at ways to boost its profits. Now, this, of course, begs the question of whether Vanguard could shift its focus and start introducing spot Bitcoin ETFs in the near future. Well, the short answer is that it seems highly unlikely, at least for now. As we've discussed, Vanguard only invests in low-risk assets, actively avoiding volatility. Well, even though Bitcoin is arguably the safest cryptocurrency of the bunch and probably the best asset out there to hold long-term, it's important to acknowledge that it does go against Vanguard's tried and tested philosophy. In fact, Vanguard's entire focus is to try and protect investors from taking on risks that could cause havoc with their portfolios. Crypto's ability to move up or down by double-digit percentages in a single day is exactly the sort of risk that Vanguard investors arguably want to stay away from, hence the reason why Vanguard has vowed never to offer its customers a spot Bitcoin ETF. More to the point, Vanguard has tried to distance itself from the crypto market altogether. This is in stark contrast to other asset managers like Fidelity, which simply reminded those who wanted to purchase its spot Bitcoin ETF of the risks associated with doing so. It also contradicts the fact that Vanguard offers Bitcoin futures ETFs, which are much riskier products. Now, rightfully, this has angered many investors using Vanguard's platform, who feel that their funds are their own and shouldn't be subjected to gatekeeping. One of these investors is Coinbase senior engineer manager Hugh Kohler, who said he will be converting his Roth 401k savings to Fidelity. He's not alone here because many Bitcoin enthusiasts using Vanguard have also threatened to leave and switch to a different investment firm, such as Fidelity or BlackRock. It even sparked a hashtag boycott Vanguard movement on social media. So then, you'd think that maybe Vanguard would listen to its customers, right? Wrong. In fact, Vanguard doubled down on its stance by removing the option to purchase Bitcoin futures ETFs in response. However, with Salim Ramji as the newly appointed CEO, Vanguard's attitude towards crypto could change further down the line. Recall that Vanguard's board of directors are pushing for the company to become more profitable. Well, considering that the spot Bitcoin ETFs have brought in well over $250 billion in trading volume, this one seems like a logical option. That said, Salim has also said that he doesn't want to rock the boat too much when he first arrives. He even announced early doors that he has no intention of reversing Vanguard's decision on Bitcoin. He said, quote, "I have heard Chief Investment Officer Greg Davis's explanation, and I think it's entirely consistent with Vanguard's investment philosophy." However, something else Salim said could have deeper meaning. He pointed out that, quote, "The current investor landscape is changing, and that presents opportunities to Vanguard to further its mission of giving people the best chance for investment success, which is more relevant today than in the firm's 50-year history. My focus will be to mobilize Vanguard to meet the moment while staying true to our core purpose." Now, call us crazy, but that sounds to us like Salim wants to try and orange pill Vanguard's board of directors. I mean, it's hard to think of another modern asset that has disrupted the investment landscape as much as Bitcoin has, and BTC is famously the best performing asset of all time, having gone up over 720,000x since it debuted in 2009. But even if this were the case, and Vanguard suddenly pivoted to launch its own spot Bitcoin ETF, it wouldn't happen anytime soon. At the very least, there will need to be some further regulatory clarity, and the crypto industry will have to become more established in order to stand a chance against Vanguard's risk-off ethos. Now, this ties into the potential impacts a Vanguard spot Bitcoin ETF could have on both Vanguard itself and the crypto industry. Well, let's start with the obvious. If Vanguard does decide to launch an ETF, this would be bullish for Bitcoin. In fact, Vanguard's ETF decision could perhaps be seen as more bullish than all existing spot Bitcoin ETFs, because it would prove that even the most skeptical investment firm cannot say no to Bitcoin forever. The possible surge in ETF inflows could then spill more directly into the crypto market as more people become aware of what Bitcoin actually is and learn why things like self-custody are so important. Not only would this be good for crypto, but it would also be good for Vanguard, and it would even allow them to close the gap on Salim's old buddies over at BlackRock. Heck, it could even be the push Vanguard needs to overtake BlackRock in assets under management. For reference, Vanguard now commands $2.6 trillion in AUM for its US-listed ETFs, whereas BlackRock controls $2.8 trillion. It's a closer gap than you might think, made closer when you learn that Vanguard has been closing in on BlackRock's market share for 20 of the past 21 years. On the other hand, if Vanguard chooses to never reverse its stance on Bitcoin and cryptocurrency, this could leave them trailing Larry Fink & Co. for the foreseeable future. As Bitcoin continues to gather momentum and the spot ETFs continue to outperform, Vanguard would be forced to watch from the sidelines. In fact, this could continue to frustrate many of Vanguard's users, who may choose to jump ship. At this point, Vanguard's board of directors would probably have to rethink their strategy. All that being said, though, it's not like Vanguard can't afford to give it all a miss. Recall that it has $8.6 trillion in AUM. Well, the cumulative spot Bitcoin ETF volume is around $270 billion. But that's the key word, cumulative. Even if Vanguard was to match the number one provider, Grayscale, it would be looking at less than $1 billion in volume. That might sound like a lot, but it's essentially pocket change for a Wall Street big beast like Vanguard. So then, regardless of whether it decides to go ahead with a spot Bitcoin ETF or not, it's clear that the good ship Vanguard will keep sailing on regardless. So, steady as she goes, Mr. Ramji. Okay, that just about wraps it up for today's video, folks. So if you enjoyed it, bombard that like button, subscribe to the channel, and ping that notification bell so you don't miss our next one. If you think others could benefit from this content, then take a second to share this video with them. And if you're looking to buy yourself some crypto, then be sure to use the Coin Bureau deals page. It's got trading fee discounts of up to 60%, sign-up bonuses of up to $60,000, and discounts on some of the best hardware wallets too. The link to that treasure trove of goodies is down below. Okay, thank you all so much for watching, and we will see you in the next one. Until then, this is Guy, signing off.